Dear friends, we have a very important session which is touched upon by our Honorable Chief Guest also. Filing of your income tax returns, what are all the latest changes in ITR forms, and what is the last month tax planning? What type of investment strategies you have to make it before 31st March to 2024? Because hardly we have a 1.5 months time. What are all the investment? A reminder, checklist, which you can keep it. Of course, we will be distributing the entire PowerPoint presentation to all the delegates. But you must know that this is the first time the income tax return forms has been done this much earlier. Never been there in the past. We'll be waiting only. And in the month of May, you have time up to file the TDS. So hardly we used to get 2 months, but still forms will not be notified, all the forms. This time, they have done a great job. In fact, notifying the forms well in advance. So what are all the forms? Which form you have to do that? All these things are very, very important. A professional touch is required. A reminder checklist is required. That will be covered by Mr. Abhishek. And Abhishek, a small introduction. And he was elected Secretary of the Southern India Regional Council of the Institute of Chartered Accountants of India for the year 2021. He is a President of All India Taxpayers earlier, consistent topper in his academics, and the All India first rank holder in CIMA examination, and an All India 17th rank in the final examination. He is the youngest elected Regional Council member in the history of SARC of ICI. He was elected 2 terms in succession for the period of 6 years. 1619, 1922, securing the highest number of votes from Tamil Nadu. He is the president of the Citizen Awareness CAFE, presently he is the most prestigious Rotary Club of Madras Next 23-24. He has authored more than 10 books of professional interest and taxation of capital gains, overview of Companies Act 2013, taxation of non-residents made simple, and commentary on prohibition of Benami Property Transaction Act, among others. He is the honorary first secretary for the Consulate Republic of Zambia. He has organized and spoken a record number of 5,200 seminars, workshops and conferences, and he has covered virtually all the branches of ICI and ICMI, and he was felicitated with the Gold Star Award for the same, and so many awards what he has received, and nominated by the Tamil Nadu Public Services Commission also for formulation of syllabus for competitive examination, and he is a member of the Committee for Implementation and Survey of Faceless Assessment of Appeal constituted by the Ministry of Finance, Government of India. He regularly appears on national and regional TV channels and contributes articles of professional interest in Tax Guru and other places. With this prelude, I great pleasure in presenting before you Mr. Abhishek. Please give me a big hand, and over to him for his presentation.
A very, very warm good evening to one and all present here. The Honorable Chief Guest, Shri Sunil Mathurji, Principal Chief Commissioner of Income Tax, the various council members, speakers, Vaiti sir is my guru, Sarana Prabhu is also a very close friend. Thank you very much to the huge gathering of members who have joined here today. It's a pleasure and privilege to be addressing once again at this forum on what is a very, very important topic. The Honorable Chief Guest gave a really wonderful opening. As I was telling him, to have someone at that standard touch upon the practical aspects that is affecting all assessees, all professionals and taxpayers was very, very helpful and very, very insightful. So I hope I can take the leaf out of his book and touch upon certain more practical aspects that is very, very important for us. So the topic that I am covering is, as rightly pointed out, the changes in the ITR forms. Normally it's a busy time for me during May and June because I will be speaking all different branches about the changes in ITR forms. From my office, they'll be calling saying, clients are coming, please come to file the returns. So at least this time we can do the changes well ahead of time. Never has it happened in the history where you get the ITR forms in January when you have time up to July. So we can analyze it in a very detailed fashion to understand how we need to be prepared and what are the important checklists. But before I get into the specific changes, I want to touch upon certain key developments which are happening around. Because technically speaking, the tax law hasn't changed per se. The tax rates haven't changed too much. So therefore, when the tax collections have gone up so much, earlier tax collection used to go higher because of higher taxes. Now the taxes have remained the same, but the tax collection has jumped. So that means administratively some change is happening or some major difference is happening. The first thing we must be aware of is the Form 26AS. Normally when you file a return of income, we ask for the details from the client or the taxpayer, bank statements, Form 16, all these details. Then we will look at what is called the Form 26AS. Now this Form 26AS has been evolving over a period of time. But please take my word for it, in the last 12 months there is a major change. The major change is, earlier, everything you could do by simply looking at the 26AS. Your self-assessment tax, your advance tax, any other types of tax payments you are making used to be captured in the 26AS, but not anymore. Now only your TDS details will come in the 26AS. Nothing else comes there, only your TDS details comes with the 26AS from this year onwards. Because there have been the AIS and TIS which has come. Now one of the fundamental things in 2020, the CBDT and CBIC shared an information sharing pact. I still remember, I've heard this story, when an article he was going for an audit of a company. He asked, they told him, go do the audit and come. What I should do, sir? Go do vouching and come. So he went to the officer, give me your bills, I want to vouch it, etc. So they gave the ledger. So he is checking the ledger with the financial statements, it is not matching at all. He says, sir, I have been sitting for 2 hours. He is telling the company accountant. He said, I am sitting for 2 hours, it is not matching at all. He said, see, that is because you are looking at the indirect tax accounts, but you are doing the company accounts. You please provide him the company law financial statements. He said, what is this company law financial statement? What is this indirect tax financial statements? Really, companies used to maintain separate books of accounts which they used to give to direct tax authorities, separate books of accounts which they give to indirect tax authorities. Because they knew very confidently the two authorities will never check. They will never reconcile and tell. In fact, historically we have seen, at least before GST, you write a letter, anything to indirect tax authorities, we don't know what will happen. It's like a black hole. You write it, that's all. Maybe it goes into a drawer or something, I don't know, but never you used to get a response at all. But I think since the GST regime, there's been a change. But more importantly, this information sharing. Because now, whether you know it or not, your details of what you are filing in your GST return gets captured fully. Your month-on-month turnover, your month-on-month tax you have paid, input tax credit, everything gets captured in your AIS and TAs completely. You don't have to give anything. Income tax itself will say. They will come and ask you why you are not offered this to tax. So it's got completely captured there. So this AIS TAS, I've just taken a screenshot of what the AIS TAS looks like. It's a very simple case where you can see dividend details is captured, your sale of securities is captured, your purchase is captured. In length, I have shared many stories about this AIS TAS, how it has, been a huge, breaking change in finding out information about the assessee. Now I'll ask you one more question here. Do you know what this is? Rent receipt. So how many people have actually seen this? Normally we will see this only when claiming HRA. People who are getting rent have never seen this actually. Because it is never actually given. You just get it credit into your bank account. So this book will be there in all the stationery shops. And when you are claiming HRA, everyone will see common format. The same thing, same color also. No one will change the color so many years later also. So this HRA was commonly used, to claim, I would say, false HRA claims. Sir was sharing how so many huge deductions are being claimed. And this was in fact busted by the income tax department in Bangalore. A very, very famous IT company, one of the biggest IT companies in India, where it was found one of the employees used to create HRA agreements for all the employees. In fact, I worked in a Big Four, and in this firm, it's a firm full of chartered accountants. There's 700 or 800 chartered accountants working there. But the person who used to file the return of income used to be assistant who will go take print, Xerox, etc. That person used to file the returns for all the chartered accountants. So I asked, how much does he charge? He said 200 rupees he charges, he'll just to file. I said, any other services? Yes, if you want rental agreement, he will draft it for you. He will do everything that you need. So he will charge value added services 50 rupees extra. So there used to be people like this who are doing, clearly it was done and they were busted. It was completely found out. But then it was by chance this was done, back when this bust was done. What we have today is not there. Last month, I had a client who came to me, it's a new client, and he said, I want to file the return of income, and I asked him, sir, what are the details, what do you have, etc. Do you have any assets, are you getting any rent? No, I have only land, sir, I don't have anything. Just to file, simply I want to file the return, I just want to be a tax compliant assessee, I want to file the return of income. So TK, we will file the return of income. Then, we opened the AIS and TIS. Then I said, sir, if you have got some rent from a person, no, how did you find out I got rent and all? I have only land. No, whether you have got rent, anybody, your tenant, is he working in Apollo Tires? He said, yes, sir, there's one tenant. I said, does the tenant stay in your land? Actually, on that land, I have 3 houses, sir. I said, why you didn't tell me before? Sir, I didn't strike me to tell you, sir. He remembered the land, but did not remember the building on top of the land. So, sometimes, they say, why this was not found out? One very funny story is there. One person goes and he reports to the police. Sir, I have a complaint to make. What is a complaint? One thief has stolen my credit card. So immediately police says, okay, when did this happen? Sir, 3 months back it happened. 3 months back, why you didn't report it then? Sir, actually, sir, that thief was spending lesser than my wife, so he didn't strike me to report. They say, okay, that and all fine. Why you reported now then? He says, because now I think the thief's wife is using, sir. The spending has gone up again like that. So sometimes still something flags off the issue. It never strikes you that you have to report it. This AIS has been a great whistleblower. It's a great whistleblower. And in fact, just last week, I think the CBDT chairman and the revenue secretary had given a statement saying this year onwards, notices are going to be issued for people who are not filing the return of income. Till now, normally that was not done. It was expected people will be compliant, but now if you don't file the return of income, notices are going to be issued. Now, these are examples, various transactions which have happened in the AIS and TIS, but I wanted to share a funny story actually. The AIS and TIS is not foolproof though, because one assessee, I was filing his return of income, and when I was filing, he had an interest income of 65 lakhs. 65 lakhs he had interest income. So I called him. I said, sir, you have given me all the details, you have not told me this information. He said, you are wrong. I have not got that much. He said, sir, you have got. He said, Abhishek, if I have got 65 lakhs as interest, that means my fixed deposit value should be more than 6 crores. Then only I can get 65 lakhs interest. Where have I got the source to get 6.5 crores? Then I said, no, but the bank has reported, sir. So then we went to, he checked with the bank, etc. He sent me all bank statements, everything. See, I don't have that much balance, etc. Then what we found out later, yes, the bank has incorrectly reported his fixed deposit balance as his savings bank interest. So they have communicated this. So then repeatedly we were telling, sir, you correct it, and they are not correcting. Finally I said, sir, you do one thing. You write a letter. You are saying, no, 65 lakhs interest. It's okay, I will pay the tax on it. But since you have reported 65 lakhs is my interest, that principal portion you have to return to me. So once he wrote a letter to the bank saying, please give the 6.5 crores as my principal amount back, next day they corrected the error. So mistakes also happen. So first, you take your 26 years, you take your AIS, you compare it. Then when you find any entry is there in your AIS or TIS which is wrong, maybe like this, what should you do? Should you simply pay the tax on it? We cannot pay the tax on 65 lakhs. What if they don't correct it? This error you come to know on 30th of July. Bank does not have time to correct the error before you file the return of income. You have an option in the AIS TIS. It is called a compliance portal. You go there and you can submit whether it is correct or wrong. You can submit a response, you can submit a feedback. Please ensure you do it, because today orders are being framed on 143.1 based on 26 years. I don't think the day is far off where it will be done based on AIS and TIS as well. So please ensure you are responsive. Whenever you get that notice, high value transactions, compliance portal, you get all these notices, ensure you respond to these notices, because otherwise you could be in for a rude shock if the order comes with a very, very high demand. So what to do if there's a mismatch between AIS and TIS? Now I'll tell you once again, this is a real scenario. I've taken it from a real case, where dividend in the 26 AS was 5 lakh rupees. Dividend in the AIS and TIS is 7.2 lakh rupees. So which is correct? 26 AS. Now the bank statement will have one other figure. So ultimately client will tell you one third figure, fourth figure. Sir, sir, I didn't get dividend at all. So now which figure is correct over here? Normally speaking, 99, initially when AIS and TIS was first introduced, there were some errors. But I have seen my experience in the current year or the latest years, the AIS and TIS is 99.99% of the time correct. 99% of the time it is correct. Dividend, 26 AS reports only if TDS is deducted, or that person reports it in their quarterly return. Whereas AIS and TIS reports the entire dividend that you are receiving. There may be some mismatch with your bank statement, because some may be dividend declared, not yet received, etc., but it will be minimal. But most of the time, the AIS and TIS is correct. So I would suggest, accept the AIS and TIS, but if there is a substantial difference between that and the actuals, that's when you need to report it. Next is a common question I got asked even before the seminar. 2-3 people came up to me. Sir, what if TDS is deducted but not remitted by the deductor? I have a client, he's a very leading doctor, and he works in a university attached hospital, etc. And for his wife, he used to file the return in time. On 31st of July, before that he used to file it. But for him, he is also, both of them are salaried people, but he used to file his much later. So I asked him, sir, why you are filing late, you are paying penalty and all each time, what is the reason? He says, no, if you try to file mine in July, that TDS will not be there. I said, why? Are you paying advance tax or self-assessment tax or something? He said, no, they deduct it, but they remit it later. I said, why do they remit it later? No, that and all I don't know, I am a doctor, I don't know anything. So then we found out that they deduct it for their working capital. The company rotates the money. And when they feel, okay, they have made enough, they will deduct before the last day. November, they'll deduct all the taxes, what they have deducted, they will remit it against the name and they'll file the returns. In some cases, they won't even do that. They may not even remit. Especially in these NRI cases, where NRIs are selling their properties and it is being bought by an Indian person, 20% is the TDS on the sale consideration at the time of sale. If you are a resident, it is 1%. If it is in excess of 50 lakhs. If you are a non-resident, 20% on whatever is the sale consideration. Sir, I have a loss. It's a capital loss. It doesn't matter. You still have to deduct 20% on the sale value. In such a scenario, if it is a resident person, I have a form 26QB. Immediately I will deduct before the registration itself. You will have the proof that the tax is deducted and remitted. Whereas for a non-resident, 20% amount, he has to get a TAN. He has to ensure he remits it after the transaction is over, and he has to file a quarterly TDS return by correctly filling your seller PAN details. Otherwise, you cannot take the credit when you file the return. So you will say, sir, please, sir, I have got only 80%, 20%, have you remitted it? I will do it, you call me next week, we will see, like that he will tell, when actually you are the seller. So therefore, you are at the mercy of another person. So if this person defaults, or he deducts and remits it late, what is your remedy? Do you have a remedy? Should you end up paying the tax on this amount? We work with many people in the film circle, and we have found in that it's very, very common, where producers, they will deduct the TDS, but they will not remit at all. It happens much, much later, years later, in fact, in some cases. So what happens? Do we end up paying the tax? Already it's been deducted against my name. No. What should I do? Well, there is a section in the Act, section 205, which states that if it's been deducted, automatically you are entitled to the credit. You need not prove it. It need not come in 26 years, it need not come in AIS, TIS, etc. As long as it is deducted against my name, I can show the bank statement, I can show the invoice, etc. I can claim the credit. But can you do that in the income tax return? The return does not have any avenue for you to report that. So what should I do? Naturally, our friends in CPC
will immediately send a notice saying so much is the TDS deducted, you have only offered so much, you have not paid the tax, etc. So they will make the addition. Where will I go and represent? Now here, let me give you a practical tip. The first thing you want to do, you cannot control that. You report whatever you have got actually TDS, even though it is not reflected in the 26 years. But when you get the notice from CPC under 143(1), saying that, oh, you have claimed so much TDS, but it is not there in your 26 years, you must ensure before that comes, you file a complaint to the TDS wing, saying TDS has been deducted against me, but it has not been given to my credit. It is not reflecting in my form 26 years. File a complaint and keep it on record. Number 2, ensure after this complaint is filed once, you write a follow-up letter to that deductor. Sir, I checked my form 26 years, you are deducted, but it is not reflecting. Please ensure you do the needful. Like this 2 or 3 notices you write to him. So finally, when you get that notice from CPC saying you have claimed one credit which is not reflected against your 26 years, you simply have to make a 154 application to the jurisdictional officer or jurisdictional commissioner and say that I have given so many letters, here is the proof, I have raised the complaint. Section 205 allows me to take the credit. Even though it is not there in my 26 years, it has been deducted against my name, it is there in my bank statement, I have received only the balance amount, and I have raised a complaint also. Immediately the department, normally, they give you the benefit of the credit immediately. But it will not come at the 143(1) level. It will come only after you do 154. Because CPC will do a systemized process, where they will check with the 26 years and immediately they will check, oh, you have claimed extra TDS in the return, it is not there in the 26 years, they will disallow. But you must make a manual application under 154 and do the same. Can I take TDS credit in somebody else's name? Basically, when you say, this is where the TDS has come into somebody else's account, but I want to show it in my return of income. Can I do it? Earlier it was not possible, but now you have a functionality in the return of income itself. Let us take a scenario example. When there's a sale of property, there may be 2 or 3 co-owners. The buyer in a hurry, entire TDS he credits it against one PAN, against a single PAN he does it. Can the other 2 people claim it? Earlier it was not possible. Again you will have to make application 154 and all that. But now you can do it. So you can see over here, this is the TDS schedule, where TDS which is deducted in other people's hands also, you can make a voluntarily disclosure and you can do it. So in summary, I think the 26 years and the AIS-TIS has been a game changer. If you have been reading all the news articles, direct tax collections all-time high, 6% of India is now filing the return of income, up from, I think it was 1.5 or 2% 10 years back. So it has jumped to almost 6%. It's a huge jump. And I think the AIS-TIS is a game changer in this aspect. I thought I'd make a short video to show how this is actually represented in the form of a video. Sir, can you put play?
வணக்கம் சார்.
உள்ள வாங்க.
வணக்கம் சார்.
உங்க பேரு?
ஐயம்பேட்டை அருளை நம்பி கலியபெருமாள் சந்திரன் சார்.
ஆமா, உங்க பேரை யார் கேட்டாலும் இப்படிதான் ஃபுல்லா சொல்லுவீங்களா?
ஆமா சார்.
ஸ்போர்ட்ஸ்ல ஏதாவது இன்ட்ரெஸ்ட் உண்டா?
படிக்கிற நேரம் போக டைம் கிடைச்சா அப்பாவும் பர்மிஷன் கொடுத்தா அப்பப்போ விளையாடுவேன் சார்.
பிளாக் பேர்ல பத்தி ஏதாவது தெரியுமா? பிளாக் பேர்ல்
இல்ல, நான் ஒயிட் பேர்ல் தான் பார்த்திருக்கேன்.
நான் சொல்றது உலக புகழ்பெற்ற ஃபுட்பால் பிளேயர் பிளாக் பேர்ல்.
உலக புகழா? மன்னிப்பு சார், நான் கேள்விப்பட்டதில்லை.
On a lighter note, but I think pretty much the AIS-TIS is exactly like that. It has completely brought out all the people who are failing to disclose the proper information, business income, interest income, everything has got captured. So I think it is going to drive. We are going to see this year, and at the ground level, of course, sir has given us the view from the high level. I can tell from the ground level, 100% you are going to see a rise in the tax collection, in the tax filing also this year. So that goes without saying. So now, quickly to touch upon, what are the key changes in the ITR forms that we need to be prepared for? And let me start with first the types of ITR forms, because now there are 7 types of ITR forms. Who is it required? Who needs to file the return of income? Which ITR form is applicable for you? ITR 1 to 7, I'll come back to ITR 1, but if you are a person who has income from capital gains or more than 50 lakh salary income, you have to file ITR 2. Any business you have to file ITR 3. ITR 4 is presumptive basis. ITR 5 is for firms, LLPs, association of persons, etc. ITR 6 is for companies. ITR 7 is for registered, approved charitable trusts, societies, etc. Now ITR 1, why I left it, I'll come back to. Everyone wants to file ITR 1 only. The easiest form. It's very simple, no work, within 2 to 10 minutes you can file that form. But what is found is a lot of people are incorrectly filing ITR 1. Who needs to file ITR 1? First, you must be a resident and an ordinarily resident. So if you are a non-resident, even if I want to be tax compliant, I cannot file ITR 1. I must file ITR 2 only. Sir, I don't have any income. Simply I am filing the return. If you are a non-resident, not ITR 1. Many people, they put ITR 1 just to file. Even though they are non-resident, they will say that I am a resident and file ITR 1. You should not do that. ITR 1 is not meant for you. So resident and ordinarily resident, having total income up to 50 lakhs. If you have more than 50 lakhs, forget it, you cannot file ITR 1. Having income from salaries, one house property, and other sources. If you noticed, I have underlined, double underlined, bolded and all one house property. Why? I'll tell you why. There's an assessee, he has 2 house properties and he is keeping one as self-occupied. He is living in that property. Other house property is let out. He has let out the other property. He is getting, let us assume, 5 lakhs rupees after standard deduction, everything. He is getting 5 lakh rupees as income from house property. Now when he wants to file ITR 1, he has to report only one property. So he reports the property that's let out. Has he hid any income? Because if you compare ITR 1 and ITR 2, there is no change as far as his income is concerned. It is the same income that he is offering. But there is an incorrect disclosure over here. Improper disclosure. He has 2 house properties. Even though the total income and even though the taxable income may be the same, it's a wrongful disclosure. He just wants to file the return in a very easy manner. He does not want to comply with the other provisions of the law. So that's why he is filing ITR 1. Now what about something else? I'll tell you one thing. The startup culture, of course, in the last 8-9 years has blown up in India. It has become a very big thing. So now a person who's a director in any company or holds any unlisted shares, your friends tells you, I am starting a company, simply you buy 2 shares. Okay, I will buy 2 shares. Then ITR 1 gone. You have to file ITR 2 or ITR 3, plus you have to report this information. What is the information you need to report? Nature of the company, type of the company, PAN of the company, what's the opening balance of the shares? Have you traded any shares during the year? What is the closing balance of the shares? What is the value of the shares? All these aspects, year on year, you have to report. So one of my clients, he's a very, very leading HR expert. He's an HR expert. And he negotiates for companies. When they are hiring CFO, CEO, that level of, talent positions, he will go and negotiate with them on the company's behalf. That is a very unique role. So this person used to get some business income or salaried income, etc. So when I was filing the return, the office just happened to check when they just Googled his name. And it came up, you have this website, Zauba Corp, all these kind of free websites, which shows the list of companies in which you are a director. So I asked him, then when they said, sir, he's a director in a company. So I called and I asked him, I said, sir, are you a director in this Rainbow something company is there? Yeah, Abhishek, that is in 1991 as a director. So I'm not associated with the company. That I closed. After that only I got into employment. So that is nothing. I said, but it's reflecting in the free website. It's not even, I have not paid any money at all. I just Googled it. And it's reflecting your name as a director. He said, no, that's wrong. So you don't have to report this. So I may not have to report that you're a director. But I asked him, did you wind up the company? Now we are all professionals here. How many winding up cases you have done? You have done incorporation, firm, LLP, various types of entity, proprietorship. But number of people who have done winding up is very less. Because the moment a business fails, people just forget it. They'll say, forget it, I want to move on. But they don't formally close the company. So he may not be a director. Company is dormant, all that gone. I cannot become a director, 5 years, all that limit. But he will still be holding shares in the company. Because the company is not wound up, no? So he still holds shares. So therefore, these provisions become applicable. So any unlisted shares, Indian or foreign, does not matter. Foreign means you have one separate schedule, foreign assets which you have to report. Indian means you must ensure you report it here. If you hold even one unlisted equity share, remember you cannot file ITR 1. Even though you satisfy everything, you must file ITR 2, or if you have business, ITR 3 you must file. You cannot file ITR 1. This is a mandatory reporting that has to be done. So this is just the details of what and all they are seeking if you are a director or you are holding any unlisted company shares. Now, 115 BAC, the new regime, the improved new regime is in effect for the first time. We have already covered the new regime in detail, so I am not going to talk about the new regime. But what is the additional reporting responsibilities that we have now? Now, the additional reporting responsibilities, you now have a special schedule where you have to state whether you are opting the new regime or opting out of the new regime. Because if you remember, you have to, if you are a business associate, once in a lifetime, remember, you can opt and opt out only once in a lifetime. You have to disclose this once in a lifetime through the schedule. And not only that, you have to file a separate form called Form 10IE. Now sometimes we wonder, why so complicated? You can just put one button here. No. That itself I am thinking, what is your issue? Why I should file a separate form? If you look at that Form 10IE, nothing is there. It will just say name of associate, address of associate, phone number. I am accepting that I am changing to the new regime. Yes, and that's it. That one button they can put in the income tax return itself. No, why they are putting separate form? I'll tell you why. The reason is so that people don't say, sir, instead of pressing left, I pressed right, sir, by mistake. So it is not genuine. I want to go back to the old regime only. I don't want to opt out of it. So you cannot use that excuse. Because Form 10IE, voluntarily you are selecting a form, voluntarily you are filling the details, you are giving OTP, and then only you are submitting that form. So tomorrow you cannot come and say, sir, by mistake I filled OTP, sir. By mistake I filed that form. You cannot say all that. So you are bound by it. And that is the reason why instead of putting a single button, they put a separate form where you are explicitly making your declaration that you are adopting a regime. Now you have something called the legal entity identificator. This is RBI introduced this. So any transaction, single transaction done excess of 50 crores in value, the recipient will have a LEI number which needs to be disclosed separately. Now that has to be disclosed in the income tax return also. So any associate that you know who's engaging in 50 crores or above in a single transfer, they will have to disclose each transfer. Whatever the LEI details they have to furnish it in the income tax return now. Now, tax audit cases, you have to disclose why you are getting tax audited, under which provision you are getting tax audited, so that tomorrow, when any undisclosed income comes, you don't say, that's what I have been tax audited. No, what is your issue? You have to tell under what section you are getting tax audited. Plus, in the return filing stage itself, you have to give what is your UDIN. So that means, first you must file your tax audit report, then only you can file your income tax return. So the UDIN of the chartered accountant has to be furnished now in the income tax return itself. Earlier this was not there. 43B, I can't cover this now because this demands a 45-minute session by itself. But I can tell you this is a huge section which is now being introduced, and it's going to have a ramification on every single business in the country. Every single business. This is a huge one where payments are made to MSME entities. If it is not done within the prescribed time of the MSME Act, you cannot claim it as an expense unless it is paid in the same year. So unless the payment is made in the same year, you cannot claim it. The problem is the timelines are very short. If I have an agreement with them, maximum 45 days. Sorry, I won't have an agreement. So that means my credit terms cannot exceed 45 days with the MSME. What if it exceeds 45 days? Then it will be restricted to 45 days. Then I will not enter an agreement at all. That's a smart thing. If you don't enter an agreement at all, then 15 days the time is. So if there is no agreement, you must ensure the payment is made within 15 days. Look at how this is going to be a game changer in terms of speeding up the payment. But it's also a lot of practical issues because most businesses today, the credit term is 6 months to 9 months. So this will urge people to definitely repay faster. But there are going to be practical implications as far as professionals are concerned, because you have the additional reporting responsibility where in the return of income, you must furnish these details of the payments made to MSMEs as well. Capital gains changes. This is the general schedule of capital gains, and this is from earlier sessions that we have had on capital gains. But what is a change as far as capital gains is concerned as far as the income tax returns in this year? Now, capital gain account scheme. Now, if you look at this schedule over here, any exemption I am claiming 54, 54 EC or 54F, I must do it within the prescribed time, 1 year before, 2 years after, or 3 years after in case of construction. 54 EC means within 6 months from the date of sale I must do it. Suppose I don't do it, then before the due date of filing return of income, I must put the money in a capital gains account scheme. That is a rule. Now many people, they don't put it in the capital gain account scheme. It is not normally done. There are n number of judgments on this aspect. But more than that, the claims are usually not done in the capital gain account scheme. So what happens in effect of this? In effect of this, the capital gain account scheme, as far as it is concerned, earlier there was no need to report the details, whereas now it is completely mandatory for you to capture details in the return of income that you file. What details have to be captured? I must give the details of the account number of the capital gain account scheme. I must give details of what is the date of deposit in the account scheme. I must give details of the IFSC code of the bank account in which I am depositing it. So therefore, the department is ensuring that you are compliant to this. Tomorrow if you come and say, I gave false details, you cannot give false details here. Earlier people will say, you just put capital gain account scheme, we will see it later. That was a very, very common, thing that people used to do. But now they are binding you by ensuring that you have to report the specific details like what is the transaction number, date of deposit, IFSC code, etc. Not only that, cost of improvement. Cost of improvement earlier in the income tax returns, I put the sale consideration, I put the cost of acquisition. Cost of improvement, I may have multiple cost of improvement. I built a building, I built the fence, I built the wall, I built the gate, so a lot of work has gone into it. So I have done in different points of time. So I will have one cost of improvement in one year. Earlier I simply had to put a simple number. I myself had to index it. I myself have to give the cost of acquisition, cost of improvement, and put the number, that's it. And it was accepted also. Now I have to give a year-marked figure against which year I have done that cost of improvement, what is the amount, what is the assessment year in which this has happened, and the system will automatically index it. You don't need to do it. So that tomorrow when you make a mistake, you say, sir, by mistake, sir, instead of putting 100, I put 300 and I multiplied it. So that you don't do things like that. They themselves will calculate the indexation and they will give you whatever is the final figure. The next critical change, in fact, is also the reporting of your 54 EC. 54 EC is nothing but investment in rural electrification bonds, NHAI bonds. I must do it within 6 months from the date of sale of the asset. Now earlier, once again, I could fill whatever number, 54 EC, just to put one figure. Maximum cap 50 lakhs is there, I will put 50 lakhs. Whether really I have done it, that assessing officer has to pick up for scrutiny. Suppose he finds out, then only this case will come up. Now 54 EC, also, you have to report the details of the bond that you have purchased. So NHAI bond, RES, so NHAI no longer, but REC bond, I have purchased a REC bond, I have claimed 54 EC. You have to give, you will have a unique number that gets furnished when you have these 54 EC bonds, etc. You must ensure that you fill the details of that unique number when you are filing the income tax return. So this is once again improved, filing. It is no major groundbreaking change, but it has a lot of nuanced impact which will be there. So I cannot simply put, you invested, okay, I will put the figure. No, you have to get the receipt. You have to get the proof of the receipt, you have to fill out the details, and only then it will be accepted. You cannot put dummy number 00001, it will not be accepted. So you must ensure that you fill the proper details, and only then you can claim it. Online winnings, now online winnings is being taxed at 30%, a higher tax rate. You have a specialized disclosure for this. You have to disclose what is your entry for the gaming. For example, I join a game, I am paying 1,000 rupees. When I win the game, I win 40,000 rupees. So 40,000 minus 1,000, 39,000 is taxable for me. Earlier I just had to fill the net figure. Now I am mandated by this income tax return to show what is my entry fee, what is my winning. And the TDS which is deducted at 30%. So anyone who is gaming and gambling online, they'll have to end up suffering a huge TDS. They'll definitely file the income tax return. But one experience that in fact we had, sir, and one of the associates is a small business person, he is not a big guy. He has traded in bitcoins. He has traded in cryptocurrency. And for some reason, this cryptocurrency, that agency which is doing the transactions, cryptocurrency, against his PAN, they have reported a transaction of 6 crores. 6 crores they have reported. So I asked him, have you transacted? He said, I am doing few lakhs only. It's impossible that I don't have the source to do it for crores. And we are writing, normally we'll write to a bank. If there's an incorrect entry in the 26 years, we'll write to the bank. They will correct it and they'll give it within 2 days or sometimes maximum 14 days, 2 weeks it will take them. But this cryptocurrency agency, we're writing, 6 months he's writing, we delayed filing the return. 31st July we did not file. Because I said, you will get a huge 6 crores and all. You will get a notice, you will get a survey, you may get issues. So please don't file it. We'll wait for them to correct it and then we will file it. Waiting, 6 months over. It is coming near to 31st of December. Still the cryptocurrency company is not doing it. I don't know what is the logic. Whether all other transactions they are wrongly capturing against his PAN, but there's no recourse. You put their contact us number, you call them, nobody is answering. You write a mail to them, nobody is responding. Who do we go for a query? So once again, we had to raise a complaint and put it on record with the income tax saying that this does not pertain to me. I don't know why it is there. Only this extent it pertains to me. But we did not take the credit also. We didn't offer it also, the expense, because it's a purchase of bitcoins. They have reported TDS of such a huge amount. He has not done it. So this online gaming, this cryptocurrency, I can tell you is a huge black hole now. Because a lot of these companies, they're running in a very unregulated way. They're using ICC tournament, T20 tournaments to market the name of their company. And many people are engaging in these transactions. But it has a ramification on the larger basis, gambling, etc. But it also has a ramification as far as income tax is concerned as well. Changes in deductions. Sir, in fact, touched on one of it. He said political contributions, one person has 1 crore as income. 80 lakhs he has shown as he's given a political donation. I think using that example, they have in fact asked for improved reporting in 80 GGC. Now you have to give the details of who you are donating it to, what is a political party, whether there's a unique number, give that details, when you did it. All these details have to be furnished mandatorily under 80 GGC from this year onwards. In fact, 80U and 80DD, where you have a disabled person in the family, or you may be disabled yourself, you have a deduction of 75,000 up to 1,25,000. This benefit, if you have to take, you must file the form 10IA. But people, they used to give wrong claims here also. Again, as you can see over here, improved compliance. You must give the nature of the disability, who is the nature of the dependent that you have, whether PAN and Aadhaar of the dependent is available, you have to furnish that also. And of course, form 10IA needs to be filed. No major change. You can see, it's very, very smart amendments which are brought. It's no major change, but little things which will make an impact when you're filing the return. Something as simple as someone comes on the last day, you need to have these details to file the return of income. You will be asking them that time, I need this, I need that. So this is a very, very nice way to improve the compliance which has been done. 80G, you have to give the details, ARN number. Earlier, I had to just give the PAN number, name of the person who I'm making the donation to. Now I have to give the receipt number. So anyone says 80G, I have, ask them for the receipt. You have to get the receipt. Even if it's in the form 16, it's a very important thing. People form 16, they think it is simple, we'll file it. If there's any 80G in the form 16, still you have to ask for the receipt. Because you can't file the return of income without this ARN number. So you must fill this and only then you can file. Another very silent major change in the constitution of your partnership firm. There's any retirement, there's a new partner, there's a death, etc. There's an additional disclosure that needs to be done in your income tax return that's being filed. You must ensure that you show the details of the change in the constitution. The final one I want to touch upon is the reporting of all banks. Now actually when I read this change, I was thinking what they are saying, it's already there. This has been there for a very long time. Give the details of all your bank accounts. But specifically, once again, they have stated, all bank accounts which are not dormant must mandatorily be reported in your income tax returns. Now, I don't know why, again, but I think let us take a tip from them. It's a warning. Please ensure you capture all your returns. All your bank details are captured in your returns. There are many people, some people have 10 bank accounts, 12 bank accounts. If you see that bank details, they will put only one bank account. So they will not put the other details. They'll say, I have offered the income. So what? If I'm not disclosing the bank account, you must definitely disclose the bank account details. It's a mandatory requirement. They have flagged it off this year. Let us take it as a warning and ensure that all our clients, they disclose these bank account details properly. So with this, of course, I have the checklist as well, which I have put on the screen over here. The organizers will circulate the same, but due to want of time, we have two other very, very erudite speakers as well to follow me. I like to thank the organizers for giving me this opportunity. I'd like to thank the Principal Chief Commissioner for sparing his time to listen. It's a huge privilege, sir. Thank you very much. And I thank the audience as well. Thank you very much, and over to the organizers.
Thank you very much, Mr. Abhishek, and a special thanks to our chief guest, sir, for being there throughout the session, actually. And really, sir, it is a very encouraging and motivating for us. And we'll have the next speaker is Mr. Vaithiswaran, sir. Is an advocate, Madras High Court. அவருக்கு கணக்கும் தெரியும் வழக்கும் புரியும் because he is a CMA, CS also, and he is a advocate, Madras High Court. And our chairperson will introduce Vaithiswaran, sir.
It gives me great privilege to introduce Vaidishwaran sir. He has obtained his law degree from Madras Law College and is an advocate since 1990. He has also obtained a CMA and CS. His legal firm operates with physical offices at Chennai and Bengaluru and provides services virtually across the country. He has 33 years of experience in advisory capacity as well as through before appellate authorities, tribunals and court in matter arising under domestic and international tax laws, excise, customs, service tax, VAT, GST. He has left no law unturned. He wrote the first comprehensive book, VAT in India, when VAT was introduced in 2005, and has also authored books on SENVAT credit, books on students appearing in CA final examination. He's written hundreds of articles. If you just Google his name, there'll be several pages of all his accomplishments and articles that have come out. He's considered as a specialist in tax and legal matters with in-depth knowledge of business and tax law. He's addressed innumerable seminars, conferences at the institute and outside. He's a resource person at the National Judicial Academy and an expert in real estate and technological contracts. He has been recently appointed as a member of the advisory council formed by the government of Tamil Nadu in respect of GST and other matters. He advises clientele across countries, across all sectors. He's also advised various associations and Chamber of Commerce. He's the chairman of the Expert Committee on GST, Madras Chamber of Commerce and Industry, and also a member of the General Committee of the Madras Chamber. He's a member of the Finance and Taxation Committee, CII Southern Region, and past president of Revenue Bar Association and past president of Rotary Club of Madras Southwest. He's also a member of SIC Indo-American Chamber of Commerce and recipient of the Vocational Excellence Award from Rotary. With this very brief profile, I take privilege in introducing